What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 6th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I not only want to spend some time to dive into the key price levels that you're going to want to watch for both Bitcoin and Ethereum going into the next couple of days, but outside of that as well, dive into the wide range of crypto news that's going on, from the SEC stating that securities will be tokenized as the standard, but along with that as well, that over 150,000 Bitcoin are opening up to the market from Mt. Gox. So we're going to be talking about the ramifications of this and all as we go through the video. We've also got a sponsored review of energy, so stay tuned for that. You won't want to miss it. All right, so let's go ahead and dive straight into the market here. Taking a look over the last 24 hours here, the vast majority of cryptocurrency assets are in a no trend scenario between the upside and downside. More players flashing in the red here, but again, most players here between 1% to 2% in regards to price action. So no serious shift in trend. Now, why is this right now? Why is it that the markets are relatively dead right now? Well, there's actually a very critical reason for it, and it's something that I think we should be paying attention to. And it has to do with the current price action of Bitcoin and Ethereum. So market leaders are always going to be what the market's focusing on. And before I dive into anything further, guys, before we dive into these price levels, I want to ask you all, for those of you who are recurring viewers of the channel, what do you think about the new TradingView chart? They just released gradient backgrounds, so you can have these really cool kind of transitions from the bottom to top. If you guys like this color set, let me know. Someone leave a comment down below saying, like this comment if you like the background, and then also have another comment that says dislike if you dislike the background. You like that comment. All right, I just want to hear from you guys if you like this. If you'd rather me go back to the dark theme, just let me know. But anyways, let's go ahead and dive into the actual critical stuff, guys. So starting off here in this case, I want to go ahead and emphasize on Bitcoin why the current price levels that we're at right now are so significant. We've been building here for the last few months between the peak here in August and back here all the way back in May of 2020. We've been building into a general wedge here of critical support and critical resistance. Now, I know a lot of other people are probably watching this. This is not complex technical analysis. You don't need to do complex technical analysis on this. Cryptocurrency markets, especially on longer term time frame analysis, over a multi-month analysis here, like we're taking a look back in May, in this case tends to be a matter of simple support and resistance. It tends to be price analysis here. So we're going to be watching here to see if we can get a clear break above this golden line here that's serving as resistance. Now, the point that I always try to bring up to people is that when a lot of people are watching this price, the critical thing to watch for is to actually see not only a breakthrough here, but follow through. Whether that's a pullback where we come and make this line support, or if we continue to have a charge for 2 or 3 days beyond this line of resistance, making it clear that we're going through it. That's some of the things that we'll want to look for here to actually further solidify that price action. It's not a matter of, oh, my technical indicator flipped, or, oh, simply just because we broke above this line that it's a clear sign that we're going to climb through to all-time highs. It's a matter of seeing follow through. And it takes a little bit of time after the price gets above that line of resistance or falls below that line of support to really confirm a bullish or bearish trend. So, again, keep an eye on that. Watch for that follow through. The second thing that I want to talk about here is Ethereum. Taking a look at the long-term price chart here, we've had a nice correction here from the hype of DeFi back in mid-August, where Bitcoin had set its relative highs there in price that we just looked at. But taking a look with our drawing tools here, again, doing simple support and resistance analysis, taking a look at the simple principle of price, nothing complex here. We not only set our first golden range back here in December 2018 and here in March of 2020, which we retested, which we had talked about in the newsletter as far back as 2018. But outside of that as well, we've also been going here, I was actually back more around 2019, my apologies. But along with that, we've been looking to set in our second golden range here. And that is between the resistance point back here in June of 2017 to November of 2017, where price was contested multiple times, but also where we had resistance here, here, and here. This is a very critical level. Down here at the bottom here, you can see that the lower level here is around $300, and it goes all up to where we are right now, around $345. Now, the reason this is very critical kind of price range here is obviously because of its consistency as a point of resistance in the past for Ethereum, and making that support is very, very critical in order for us to, per se continue climbing higher. And I'll just grab the polyline tool here and just talk about how it could play out, where we could start to bounce around here, start to break back up here going into the start of the new year, and really start to climb again. And again, might have some periods of time where we push sideways and then we start to continue breaking higher, right? Again, this is not actual price action here, guys. No one knows what's going to happen six months to a year out. Again, anyone who's telling you that is probably lying. What we are looking for here, though, is the short-term solidification that we're ready to make it up to that next level. So start testing up towards some of these more parabolic levels, such as around $800. This is really the last significant resistance we're going to have if we break above $500, at least from what the chart is showing us. So again, this is a very critical time to continue watching Ethereum. Now, as we dive into analyzing these bigger price levels here, there's not too much crazy things to focus on. It's those simple price levels we talked about. It's important to analyze, the supply and demand of open sellers on the market, the open availability of Bitcoin on the market, and also the demand for Bitcoin, people who are buying Bitcoin, the grayscales, the MicroStrategies, right? And also the wide range of other different buyers on the market. I think it's important not to get siloed into a few headline stories, right? So let's go ahead and talk about this. There's some big news here in regards towards the settlement for Mt. Gox, where creditors, or people who were traditionally owners of Bitcoin on the exchange platform before it had gotten hacked back in 2013, are now at a position where there's going to be over 150,000 Bitcoin being distributed to these creditors, these original owners. So this means that they will have ownership of those Bitcoin where they were originally being held by Mt. Gox custody as they've been going through this case. So let's just go ahead and take a step back here and talk about this for a moment. 150,000 Bitcoin is a lot of Bitcoin. At the surface level, you're talking about well over, hundreds of millions of dollars here worth of Bitcoin. Okay, so lots and lots of money coming onto the open market. That all being realized here at the same time, it doesn't mean that they're just going to dump all of those Bitcoin. We need to have a rational assumption that these people who own these Bitcoin are probably, with the size of their investments, well aware of over-the-counter markets or OTC markets. They're well of institutional buyers such as Grayscale, which are scooping up Bitcoin on the open market, putting them into exchange-traded notes such as GBTC, and all types of different other institutional buyers here, again, that provide new avenues to actually be able to liquidate your crypto positions outside of just spot markets. It tends to be that most of these people, maybe there's a few of these creditors who are going to have maybe a few dozen or a few hundred Bitcoin. All in all, it tends to be that they're going to probably go about selling it in a much smarter way than just dumping it on the open market. And a point that someone brought up that I thought was very true here, we saw in a lot of the articles that they mentioned this point that, Grayscale, for example, so not Grayscale, MicroStrategy, had gone about buying nearly $500 million worth of Bitcoin here over the last few months, and it didn't really bat an eye on crypto's price. So, and this was on, bear in mind, on spot markets. So this is really, really important to keep in mind here that, companies can now come in and buy a large sum of Bitcoin, what would be the equivalent of physical Bitcoin, real ownership of Bitcoin, not derivatives, and not have to incur a mass amount of slippage in this case to the upside or downside. So I think the same could be said here for selling, especially as we've been having record amounts of interest on the buy side. All right, so let's go ahead here and talk about the FCA, or the Financial Conduct Authority, which is one of the major regulators for financial activities in the UK. They have now gone about banning crypto derivatives to retail consumers. This has been a pretty big move here for those in the UK, and might be a sign of the times to come in the sense of banning derivatives. Now, a lot of people say this is bad because, it's cutting out financial opportunities, and along with that as well, I've heard that for some people, this is a very major way to get exposure to digital assets like Bitcoin in the UK. But I will say, above all, even though this will have probably some negative ramifications here, in the short term, I will say in the long term, it is going to be very healthy for people to make the transition from derivatives markets to, in this case, spot markets, basically the equivalent exchanges such as Kraken, such as Coinbase, etc. But again, I think above all, this is more of a reaction in this case to the recent news around BitMEX, in this case, from the SEC, excuse me, not from the SEC, from the CFTC, and we'll see more of this going forward, whether it's for good or for bad. I just want to go ahead and kind of take a non-biased perspective to it and just provide that clarity, and you can actually read the report here from the FCA's website, so I highly recommend you guys check it out and get some more details on it. I want to go ahead and talk about the more positive news, though, which is that the SEC, from Chairman Jay Clayton, who has been the SEC chairman for quite some time, has come out and stated recently that he believes that it's not only fair in this case to assume that all securities or stocks in this case could be tokenized, but in many cases that he, alongside many other people in the space, believe that it's going to be the standard. That whereas we've gone from a transition in this case from paper certificates for stocks to digital representations of those stocks, now we can move towards an actual ownership, a self-ownership in this case, of securitized assets in a tokenized format. And I think that this is really going to be an inevitable step forward in the sense of what we're seeing with DeFi. DeFi as an asset class has already been soaring. The amount of Bitcoin on DeFi just alone is looking phenomenal. We've had more than 100x over the last year here, right? Taking a look here back at October 8th of 2019. In the last year, we have more than 100x the amount of Bitcoin on the network to over 140,000 Bitcoin. Taking a look at the overall Ethereum here, right? We've gone from 2.2 million here to 8.2 million. Taking a look at the longer term trend here, going from a few thousand Ether all the way up here to 8.2 million. And the total value locked up here, not only between the market increasing in value, but along with that as well, DeFi continuing to explode, going from a few million here all the way up to nearly 11 billion, right? This is going to be the next transitional phase as we get more Ethereum pouring in, more Bitcoin coming in, more other digital assets, other types of digital assets coming in. It's going to be common here for stocks and other types of assets to come in as well. So I'm very, very excited for this news, and to see that the SEC is not only saying that this is the standard here, but that it's going to become the broader standard for securities in the long term. The only question is, what's going to be the platform we use to get those securities into a tokenized format? That's going to be the billion-dollar question. Now, I wanted to talk about some news here. I really don't care about it too much, guys. This has kind of been inevitable in due time, but John McAfee, who's been on the run for some time, has finally been jailed in Spain due to U.S. regulators charging him with, not only promoting a lot of different projects, but mainly avoiding taxes, things of the sort. He's been on the run for some time, so this is probably going to be putting an end to his presidential campaign run. We'll see what happens. All in all, though, again, I don't really have much of an opinion on it. Just wanted to share it with you guys. I know everyone loves to follow the crazy life of McAfee, so that's the most recent update. Diving into futures markets relatively unchanged here. The president has come back to the White House as of recent, supposedly being reported as to being much better health than from where he was back a couple of days ago. Having mild symptoms from COVID. Seems like he's going through his full recovery right now. And we'll see if that has an impact on markets going forward. I really just don't think there's too much that's going to affect equities in the broader sense here in the short term. What I think is really the biggest thing that no one's talking about is what's going on in treasury markets, the yields on treasuries. People were talking about a bounce in treasury yields here over the news here that happened over the last 24 hours with the president coming back. But I really don't think in this case that these kind of short-term news events have to do anything with treasury yields. In fact, what I think really matters is central bank monetary policy. And taking a look here at the longer-term trend since back here in 2018, since we've been covering it, lower levels on the 2-year treasury yield. And if we dive into the daily here, it's a matter of whether or not we can actually break through this short-term line of resistance. We've been setting in lower levels constantly here, and it looks like we're setting in yet another low here. And if we break down below this level here at 0.10 for the treasury yield on the 2-year, this is going to be an extremely worrying sign. This is going to be a really good sign probably for equity markets and just about every other asset class, but it is going to severely challenge the treasury, or the U.S. treasuries in this case, as being a safe haven asset to turn to. One of the major assets people utilize in things like the Sharpe ratio, to determine guaranteed income in this case, if you will. So I think, again, this is probably one of the most critical things we could be watching, one of the most bullish things. If this continues to go lower, one of the most bullish elements for Bitcoin to continue climbing back up to 20K and beyond going into 2021. We'll have to see here, though, over the next few months, guys. But I'm very, very interested to see what happens. So that all being realized, I'd love to hear from you all down below in the comments what you're watching right now, what you guys think about the news that we talked about. If you like it, drop a like. And let's go ahead and dive into this this review of energy. Alrighty, everyone. So in today's sponsored review, we're going to be taking a look over the Energy Protocol, which is not only a project we've covered many times here on the channel, but we've been big fans of as far back as 2018 when the project was just getting its grounding. So before we dive into some of these really exciting updates for the broader protocol, as well as Energy's move into decentralized finance, I want to go ahead and provide some context for those who may not know what Energy is all about. To put it simple, Energy is a community-based blockchain protocol. They've not only focused on giving away a wide range of their tokens to the community through their earndrop campaign, but they avoided doing an ICO, and they've been entirely self-funded by Tommy World Power and the community members who have been building the protocol itself. And it's not only just a community-based blockchain, but it's also pulling from a lot of the working elements on some of my favorite projects personally, such as the treasury model from the Dash protocol and the programmable framework from the Ethereum protocol to allow for smart contract migration or development in Solidity on the Energy protocol. So really making it a functionable and high-end blockchain that allows for as many users to participate in the ecosystem. And I think it's such a working system that's going to help Energy stand out in the long run. So I want to go ahead, now that we've provided some context here and talked a little bit about Energy, I want to go ahead and talk about some of these major updates. So over the last few months here, really in quarter one of 2020, Energy 3.0 launched. It was the third iteration of the Energy blockchain. And they're not only focused on allowing more people to basically serve as masternodes on the network to help reach consensus and have an ability to earn energy, but outside of that as well, they've also been working on providing that programmable framework from Ethereum, bringing over Solidity, and bringing over the ability to migrate smart contracts from the Ethereum blockchain and to start developing natively in the Energy ecosystem versus Ethereum. This has provided a lot of awesome opportunities. So the big major announcement that the team has here before we dive into some of those topics about bringing over kind of DeFi here is EnergyX, and this has a kind of really big relation to this point that Energy has been standing to scale out DeFi on its blockchain protocol. Now, EnergyX, again, I want to make it very clear and just give some props here to Energy overall. Tommy World Power, like myself, is a cryptocurrency YouTuber. He sees these trends kind of coming and going way before they actually materialize in the crypto space, way before DeFi was a big thing. Similar like myself, I've been working on Digifox for a long time before DeFi really blew up. Well, I gotta hand it to Tommy in this case because they've been set on building a decentralized exchange as far back as 2018, when really Energy was getting its grounding as a project. And now they're finally materializing on it. They've been preparing for this wave of DeFi for a very long period of time. And the great thing is that EnergyX is a commission-free exchange that's focused on bringing about synthetic assets. So this ability basically to trade Bitcoin, to trade Ethereum, to trade energy, all types of different assets in a decentralized way without the trust of centralized exchanges, and to be able to do it in a permissionless and censorship-resistant way. I think this is really exciting. The fact that they have a high focus on security, this has been a core element of the Energy protocol that I think, again, a lot of people would feel safe about. I know, being within the Energy ecosystem, I've seen how people have, for example, been misled by a lot of malicious scams out there, and basically the Energy team has been able to actually help recoup a lot of those funds, help people to manage their security, etc. So I'm very, very excited to see how this exchange is going to turn out. I mean, the general user experience we can see here already looks really exciting, but I recommend for those of you who are interested to sign up to get early access, put your email in so you can make sure to get notified for it. I highly recommend it. And if you want some more details on it here, they put out a great article a ways back, again, just to prove the date here, July 15th of 2019, that actually details what EnergyX is all about. Again, providing a zero commission exchange is massive in regards to DeFi, and it's possible through the power of the scalability of how Energy reaches consensus on the network, being a not only so much a proof-of-stake network, but really being a network here in this case that is deemed around masternodes in this case, reaching consensus. So a lot more throughput, a lot more scalability here than traditional systems, but I highly recommend going through it, reading about how they're focusing on security, focusing on scalability, speed, and throughput here, reaching to levels like Binance and BitMEX, traditional centralized exchanges, but outside of that as well, providing ease of use to be able to trade synthetic assets, which quite frankly, I don't think we've seen in the Ethereum ecosystem. Sure, there are projects like Synthetics. Yes, there are projects like UMA. But quite frankly, I don't think they do a very good job of making it streamlined and easy for people to use. And seeing the things that Tommy and the team have done in the Energy ecosystem, I'm really excited to see not only a migration of traditional Ethereum applications into the Energy ecosystem over the next few months, possibly being able to scale out some of these core protocols, but along with that as well, EnergyX being able to provide that kind of key platform to trade on the Energy blockchain. So There's one last thing I want to talk about here that was announced from Tommy World Power here on Twitter. And if you guys aren't already, go follow him. He's a world of information. He's one of the nicest, most humble guys in the space. He's been around in crypto, at least from my knowledge, for well over a good couple of years. So I think back in 2012, 2013. But could be wrong. Could have been even earlier than that in 2011, 2010. But Tommy has been always putting out gems and in Twitter, kind of hinting at what they're doing in energy and also other things to watch in the crypto space. And as we've talked about, we've been big fans of DeFi between the two of us. One thing that he's put out that I think is really interesting is a hint that they're going into DeFi very clearly. They're not only going to be iterating, again, with the support for Solidity on the energy blockchain, they're not only bringing in a port of Uniswap and also a form of wrapped energy. So, there's wrapped ETH and there's different types of wrapped assets, but also synthetic assets. Again, this has all been in the plan here for energy for a very long period of time. So one thing to keep in mind here that I always say here, again, not so much just on like an investment thesis, but just really just on an analysis perspective, when you're taking a look at all these protocols, kind of hopping on the DeFi bandwagon, take a look at the ones who have been there for the last few years trying to build this. It doesn't happen overnight, guys. And you have to look at the blockchain protocols. If you're going to be talking about a protocol that can compete with Ethereum, I would say Tommy would agree with me more than anyone in the world here. I'll speak for him in this case. And that is in fact that there are a lot of people who want to say that they're going to replace Ethereum. And you can't just replace Ethereum overnight. You need to provide the leverage in this case to leapfrog your blockchain protocol above Ethereum. Ethereum's got a massive developer ecosystem, and they've quite frankly got most of the applications built on top of it. You're going to need protocols like Energy that have the shift to be able to provide the developers to migrate their resources over in case of that momentum shift. And along with that as well, you're going to need that treasury mechanism to self-fund constant development and reward people to build in your protocol versus Ethereum where there's no self-funding mechanism. This is really kind of the key element here. And then outside of that as well, things like the Earn Job campaign that really bring in a community focus around Energy. But they've done a phenomenal job over the last few years. It just seems like Energy is getting bigger and bigger and more mature as a protocol. And I want to give a hats off to Tommy and the rest of the team that have been building this. So if you guys are interested in kind of getting started with Energy, you can always go to energy.network, or you can go to nexus.energy.network, where you can really get started on the Energy protocol. You can learn about setting up a wallet, setting up a masternode, staking, migration to Gen 3, all types of different things, the treasury system, etc. Like I said, I've been a big fan of this project for a long period of time, and I recommend you guys read into the roadmap, look into what's coming ahead here in the rest of 2020 and into the exciting year of 2021, where I think we're going to see a lot of Energy's potential coming into materialization. A lot of work has been put into this, and again, I want to give a hats off to the team and everyone who's been contributing. That all being realized though, guys, I'll leave some links down below in the description to look into it. I want to thank you all for watching today's video, and I'll see you all in the next one. Take care, everyone.